Good morning, guys. Welcome to this Wednesday, March 19th, and Fed announcement Wednesday, right? So today we get the Fed announcement at 2, press conference at 2:30, and then we'll see how this whole thing shakes out. So yesterday was not a crazy runabout day. It was pretty much in line with what usually happens on the profile. And if you haven't forgot or if you forgot about it, you can start it on the website. But it's also the three stages. We have a move out of the middle. For whatever reason, the market reprices itself. You find a spot that cuts off the first direction. Then you retrace, cuts off the second direction, and then you come back to start finding value. And that's exactly what happened yesterday. So we were on the downside. We cut off the selling. And they retrace, cut off the buying right up against that upper area of resistance on the ES, and I'm talking about this level right there, and then we are basically backed off a little bit to the downside, which is exactly what you would expect it to do. And at this point, we're sitting here waiting for value to build and potentially another piece of news to move us in a different direction. Now, the Fed announcement could be exactly that piece of news. It could knock us way down, could also retrace us right back up again and take out this resistance area at the 57.30 to 40s and take us right back up again. So that's kind of where we're at on the ES. Looking at further news this morning, we got the mortgage apps out this morning. They were a little bit to the downside, so a few like -6 and -12. They were way up the week prior, and I backed off a little bit, so going back and forth. But mortgage apps came out this morning at 10 o'clock. Nothing at 8:30. At 10 o'clock, we get the Atlanta Fed number, Atlanta Fed business inflation expectations. That is. 10:30 we get an oil report, and then we had the Fed announcement at 2. So Fed announcement at 2 this afternoon. So taking a look at the ES, just diving into it. What can we expect for today's trading day? I would say we are pretty much going to be a range bound day. Usually we didn't get much movement yesterday, very much a whole lot of directional movement. They backed off that upper edge and they were right back down. So I would expect us to stick in this range, probably below the 57.30s, probably above the 55.70s, that 4-letter edge, and they probably go back and forth until we get the number, and then probably see the market either react or be volatile and not go anywhere. We'll find out at 2 o'clock, depending. I don't think they say surprising them leaving the rates unchanged. I think it's probably what he says and how he what the outlook is. So at this point, I'm starting off flat out a range bound. So we are in stage 3, and look, I'm going to be looking to sell strength up to that 57.30 to 40s, and I'm going to look to buy weakness down to the 55.70s, maybe even down to the 55.50s. So a fairly wide range, and if you want to start off in a more narrow range, I would look for 3 levels up to 57.10, 3 levels down, 56.40s, and then see if it's going to trade outside of that range. That would be our inner range, and outside of that, we have a few more levels to work with. But pretty much range-bound trading at this point, and then let's see how the reaction is at 2 o'clock. If they start taking out the inner range, one side or the other, I think we may have a directional move, at least intraday. We'll see if that kind of materializes. But to get started, I'm going to look to sell strength, 56.88 to 90s, 5700s, 5710s for rotations back down. I'm going to look to buy against the 5670s, 5660s, 5650s, down to the 5640s for rotations back up again. And below 5640s, I'm going to be looking for a move down here into the 5600s, and above the 5710s, I'm going to be looking maybe for a test, another reverse retest of that 57.30 to 40 level. So that's how I get started this morning. There's a fair amount of range, and I could, I guess, compress this a little bit further, but I like a little bit more detail. So in other words, just to show you on the capital flow, this level right there, here is your 57.10s, So you got another little bit of range up here before you reverse retest the 57.30 to 40s. And of course, this level, the attractor at 56.20. But the lower edge there is really at 55.70. So that could be a pretty good move to the downside before you really run into that support area. So 56.40 gets you right shy of that mode, or that sort of means from this prior distribution. And it starts trending below that 56.40. So I think we can trade back into that lower range, maybe even retest that 55.70 or lower. It just depends on what the market is up to at the time, because if it backs on that far down, I think it could certainly be something going on. But it is still in a range. So I mean, unless we start taking out that 3-letter ledge at 55.40s or start probing this 2-letter ledge at 55.30s, we are still pretty much trading in a range. So we're just backing off that upper edge. And so far we haven't backed off a whole lot. The attractor and the mode is right down here at 56 at the 56.20s roundabout. And so far they're kind of above that. So we are technically in a spot where we potentially could take this higher, but to get the day started, I'm just going to start range bound. It's a little bit too much range to be too cute about it. And then so it could go either way in this fairly wide range. But to get started from where we are at, about 3 levels up, 3 levels down. So 3 levels up would be 56.90s, 57s, 57.10s for rotations back down, and looking to buy against the 56.70s, 56.60s, 56.50s, 56.40s for rotations back up again. And then we'll see. So if they start trading outside of that inner range, then we'll know that there may be an intraday directional move going on, and we just need to be a little bit more in tune with that. In other words, try to hop on that trend and see if they want to, how far to an outer edge they want to go. But remember, we are still range bound, and it be in a pretty wide range. And as you approach those outer edges, you're still looking for a reversal trade for a move back to the mean. All right, so that is how we get started on the ES. Looking at the NASDAQ and the bonds. The bond market also pretty much in the range. Not much happening on that guy right now. That's pretty much sideways. That's going sideways like this. Not much direction going on at all on the bonds. So I would just start off range bound, looking to fade the edges back to the mean. So looking to sell against 1706s, 12 to 14s, 20s for rotations back down. Looking to buy against the 17s, 1620s down to the 16, 12 to 14s for rotations back up. Fairly straightforward approach. The range on the capital flow should be pretty familiar by now, right? So it's pretty much range bound right now. Below that 116, above the 118s, you may have a directional move, but right now we're just kind of going back and forth in that range. Building value, waiting for a move to a move out of the middle, some piece of news to reprice the market, either up or down. But at this point, that's how we get started on the bonds. NASDAQ, a little bit more hopeful on the NASDAQ to be able to make something out of it. But yesterday was that one, yet another risk-off day. I guess I heard something about big institutions, a few big institutions having, or hedge funds having problems with their positions and their strategies, and being part of this kind of a liquidation thing going on these big stacks. I guess they were very focused on these big seven, the magnificent sevens, and had big positions that had to get liquidated. You can't confirm it or who they are, but they were talking about that on some of the shows yesterday. So that could certainly be part of by these stubbornly, you see a net selling pressure on those big tech stocks. But anyway, so we are right back here in the value area on NASDAQ, pretty much back in the middle of it. So I would just start off range bound, same as the ES. Look for moves to the upside. If this starts trading above the 20,000s, a little bit more positive on the long side. And on below the 19,350s, I would start worrying about the short side. Now initially just looking for 3-4 levels up, 3-4 levels down, thinking more of a range bound trading day until we get to the Fed number. So that would mean short setups against 780s, 820s, 860s up to the 890s for rotations back down. They're going to buy against support 700s, 650s, 610s down to the 580s for rotations back up again. Maybe down to the 540s here as well. But yeah, we're trading right around this volume edge right now. So I'm thinking as long as they hold above it, I'm almost thinking that long side has a better shot at it. But I'm going to just start off range bound anyway and let the market show me if they're going to want to take it higher. So they start taking out the 890s, 900s on the upside. I'm going to start thinking, okay, maybe you had directional move to the upside. And below the 580s, 570 to 80s here, I would start thinking about a move to the downside. And as you can see, the bond with the Nasdaq can move pretty quick, pretty far. So it's a massively volatile market right now. But that's how we get started. Range bound trading. If they start taking out that 570s, I would start thinking the short side of the market and see how far they want to retrace this. But remember, we're still very much in a range unless they start trading below these areas that 250s up to the 350s, the support area. Unless they start trading, if they start trading below that one, then we can start worrying. But above it, I'm just pretty much trading in the same range. And the same story on the way up. And unless they start taking out the 150s, we're pretty much trading in that range as well. Though this area of resistance at the 20,000s is pretty significant. So the psychological significance as well. They start trading above it. I think we have a pretty good shot at it taking this higher. But starting off range bound on the ES and Nasdaq, 3-4 levels up or down. And then we'll just watch and see if we get some intraday direction. And if we don't, probably just keep trading it as a range bound market until we get to the Fed number. Oil and gold. Gold is still holding the range pretty darn good. They have not backed off a whole lot, so they are up here again. If they extend just a little bit in the overnight to 3050s, backing off a little bit. So they're still on the tear on the upside. So I would stay on the long side on gold. But these been pretty sloppy action in the sessions. It's not by any nice trends by any means. So it's I would at this point I'm going to buy against the 3035s and the 30s for rotations back up, and I would look for short setups against the well, at this point against the 50s with a lot of caution. So it's I think they're still very much in line to take this higher. And at one point they'll probably run out of gas, and we'll see if that's going to. So far, they still extended in the overnight, so we're still in a stage one move out of the middle to the upside when it comes to gold. They're going to roll this, by the way, in a couple of weeks, end of the month. I believe they roll it to the June expiration, but not quite there. Let's see, where's my capital flow on gold? So here we have it. So this is a move out of the middle to the upside. And we are up here against that 3050s right now, still extending. And so let's keep trading that from the long side of the market until they cut off the buying. And then we'll see where they're going to go from there. But at this point, I would still trade it from the long side. If they're back below the 3030s, I would look for potential retracement trade back and reverse retesting the 15 or down 10 and the 15s, these two support areas. But at this point, definitely stay on the long side on gold. All right, so that's gold, and oil is kind of drifting lower. We had a little pop here as the ceasefire and went away in the Middle East, so that's gone. But you can see oil is slowly drifting lower, and in a pretty orderly fashion. And I think the targets are down here in the 50s somewhere. So I'm waiting for them to kind of really maybe have a pretty good down day where they take out some key support and really drive it lower. But so far it's just pretty early, and the policies are out there, but it's not. I don't think the supply is out there quite yet, but we will find out. So a lot of cross currents, probably keeping that risk premium on oil. But I would start from the short side anyway. Look to sell strength at this point against the 6670s, 67s, 6750s for rotations back down again. Not going to be super aggressive on the long side, though. The long trade sets up pretty nicely, and you get a few days of a little bit of upward pressure, but a net is going to be to the downside. So I'm buying against the 66.20s and the 65.70s with a bit of caution, but definitely looking for buying opportunities against them. And assuming that the market is going to be orderly and moving lower in an orderly fashion, and the long side definitely gives you opportunities. I would just be looking for better setups on that side. The short side, I think, is the one which I favor across the board until the price corrections have happened. But it's at this point, we'll be pretty much primarily range bound, favoring the short side, but still looking for buying opportunities when they show themselves. All right, so looking to get short against the 66.70s, 67s, 67.50s for rotations back down, and looking to buy against 66s and 65.70s for rotations back up again. So that's oil to get started. We are on May oil, if you forgot. So we rolled the from April to May, and gold. We're going to be rolling in a bit. I'm going to probably send out an email about that probably next week or so. But anyway, so oil from the short side oil range bound with a slight bias to the downside. Gold from the long side at this point. Okay, back to the ES, and all right, pretty much where we left it. A little bit of action going on right now. I'm not quite sure what that would be reaction to. It's no real news to come out right now. Next news is at 10 o'clock. And of course, at 2 o'clock, we get that Fed announcement with a Fed press conference at 2:30. So we'll wrap it there for now. Good trading, guys. And I'll see you back at 11:30 for the next update. All right, guys, later.